Hi folks, Lee Gettess here with the Market Sense for the week of May 31st, 2016. The charts we use in this presentation are courtesy of Gettess and their Trade Navigator software. And looking at the weekly bonds, same thing as we've had for about 3 months now. They're just sideways. They're swinging a little bit, but they're just sideways. Last week was an inside week. They made a little attempt to go below it so far, but then turned back up. I wouldn't read too much into this. We had Monday on Tuesday this week, and this is really just one day of price action there. So they could still expand it in either direction, really. We're looking probably at 163.20 and the 161 area as being the real critical zones. And I don't mean as support or resistance this week. I mean to get above them or below them. If they can get above 63.20, I think they can possibly go to 65 and a half. That's 65.16. And if they break 161, boy, the next target, the low in the congestion is around 159.16, 18. That would be a logical target for them to go if they get below 161. So I'm kind of looking for them to break out this week. I'm not saying they will, but I'm kind of looking for them to break out. And don't forget, we've got the monthly employment report coming at the end of the week. So whatever they do before then is subject to change. Stocks have a little different situation. They reacted late Friday in a positive fashion, which was a little bit surprising given that Janet Yellen basically suggested that we're going to see an interest rate hike soon. And they seem to shrug that off and rally okay. So I thought they might continue up rather quickly up here into the 21.15.20 area. And instead, they weakened Monday. Now, they weakened in relation to, I don't know, weaker consumer confidence, falling crude oil prices, reassessment of what Janet Yellen said, who knows. But as long as they hold the support zone here, and this is up in the, let's call it 2082, 83, right in that area there, if they hold that, as long as they hold that, they still look in a very strong position. And I would expect they would take out the previous highs. And yeah, there's resistance up here at 21.15 to 20, but they could go substantially higher than that, I think. In fact, it wouldn't surprise me to see them do it in a hurry and maybe then fail, but it still looks to me like they could go up. Now, if they decide they really don't like what Janet Yellen said, or they don't like the Fed Beige Book Wednesday or the employment data during the week and Friday, heck, we've got support down here in the 2060 area, which is right where the middle moving average and the projected low meet, which looks like really good support actually. And they'd have to break below 2030 before I'd really start worrying that they were in any kind of trouble. So I'm kind of bullish on them, but I'm tentatively bullish because of all the data we got out this week. So that's what we've got for you today. I hope you can find something profitable to get yourself involved